Shares continue to plunge. Let's have a look. Hello everyone, Florian Heiser here and welcome to another episode of Heiser Says. Still finishing off my lunchtime coffee, and a breaking article appeared on news.com.au discussing the share market here in Australia. We talked about it this morning, how, well, it took a bit of a shave yesterday after news from the US, and it seems to be continuing today. Before we jump through this article, let's go over here and have a look at just trading economics. We can see the S&P ASX 200 is down to 5,800. Had a peaked at over 6,000. Over 6,000. We'll jump over to the Dow Jones Industrial Average. Have a look at that, down from 27 down to 25. It's jumped back a little bit, up 1%, but look at that sharp movement. There is so much volatility in the stock market at the moment. You'd have to be very strategic with playing it. You can look here, the S&P 500 as well. It shot all the way down. All the way down. We'll have a look at the NASDAQ. The NASDAQ. Now, I did a meme I shared on the Facebook page for Heiser Says, where, because I forgot to mention, because it reached over 9,000, and I forgot to refer to the Dragon Ball Z, the power level, over 9,000. But you can see here, it went all-time highs of over 10,000, everyone. And now is taking a bit of a trim and is at 1%. Maybe we should do a market opening tonight, a live stream, and have a look. Maybe, although I'm getting pretty tired, guys. So let's have a look at this take from James Hall on news.com. So, the Australian share market plunged nearly 3% lower at the open of trade today, following Wall Street deep into the red after a rise in pandemic cases in the United States, sparking fears the worst of the pandemic is yet to pass. News of 44.2 million job losses in the world's largest economy also landed a dagger to the optimistic beat of some investors who had hoped global growth would recover sharply from the economic shock of the deadly virus. Really? Do people think that, or were they hoping there'd be enough of a positive buzz that they were trying to ride it up? The ASX 200 was lower by 173.7 points, or 2.91%, at 5,786.9. And what are we at now? We're 5,808 after the first 15 minutes of trade on Friday. So some people would have done really good on... Oh, they may not have got their shorts in time if you were shorting the night before. Energy stocks are the worst affected so far, losing 5.6%, but the banking sector suffered heavy falls also, down nearly 4%. Forecasts from the US indicated interest rates will stay at historic lows until 2023, placing enormous pressure on the profit margins of home loan products. The Dow Jones Index had nearly 7% wiped off its value overnight, and the Australian indices were also going to struggle as a result, compounding the ASX 3% plummet on Thursday, which we discussed this morning. Investors had been scrambling back into the market on the belief the worst of the economic shock was in the rearview mirror, but the Federal Reserve poured cold water on that narrative this week. Among a number of concerning forecasts, it's expected its unemployment to soar to 10% by the end of the year. This triggered an aggressive fall in Aussie stocks on Thursday, where investors abandoned their positions. I mean, is anyone... Let me know, are you playing the market at the moment, guys? How are you doing? You doing okay? You're a bit braver than me. It's just too volatile, and I'd get too emotionally swept on it. I'll be watching the charts too closely. So I've pulled back. I'm being very boring. Global markets were expecting the Federal Reserve to provide optimistic talking points and upward projections. CMC Markets chief strategist Michael McCarthy told news.com.au. The optimism that we're looking for did not eventuate, and we've seen a very sharp turnaround in sentiment, he said. So let's jump over here. Let's have a look at a few interesting companies. Let's look at CBA and see... Come on. Wait a moment. Good old broadband. Nope, that's not the one I want. CBA. Maybe I need to do... Commonwealth Bank of Australia. Come on. So we can see here. There we go. Got it up eventually. Now, if you're not familiar with this website, the one that we're looking at, this is TradingView. It's got lots of charts, lots of ideas. It's fantastic. And we can see here, well, there you go. It's from... Well, it's not looking too good, guys. Over 72 and back down 66.14. The technicals are still saying people should buy. People should buy if you're a fan of TA. I wonder if that takes account of the losses that have set aside, but maybe the market's already factored that in. We'll have a look at ANZ, Australia New Zealand Banking Group. And again, well, they've taken a big hit, and the technicals are saying, buy again, buy again. I mean, and this is a good website. I mean, let me know if you're a fan of TradingView, if you use other ones to get your data and things like that. What about NAB? Let's look at NAB. The big banks here in Australia, the big four. Again, they've taken a hit. Still buy. Still buy. NAB, ANZ, and Westpac Banking Corp, WBC. Same type of thing, guys. They're all taking a hit and they're all buying. What about good old Woolworths? Because that's a food staple. We're always going to need it. How's Woolworths doing? I remember when they first went public and it wasn't like $3. There you go. Everything, all the technicals are telling buy, buy, buy. Are you a fan of TA, everyone? I wonder if the impacts on the economy are just too much to pick up. But then again, if you're in it for the long term, Woolies is like, a boring company, isn't it? People will always buy food. So yesterday's result snapped a 7-day run of positive gains for a market which had recorded a heavy rise since the depths of the economic shock. So the broader All Ordinaries rose 30% from March. Okay, we've read all of this, and it's Wall Street. Overnight, the sell-off in the US was broad as the Nasdaq snapped a 3-day streak of record closing highs, and all 11 major sectors in the S&P 500 falling from nearly 4% to well over 9%. There's really no buying point, said Paul Nolt, portfolio manager at Kingsview Asset Management in Chicago. It's pretty much sell all the way through. Tim Grisky, chief investment strategist at Vinverse Counsel in New York, agreed. Everything's for sale, he said. There's fear. We're near a top. US deaths from the pandemic could reach 200,000 in September, a grim result of the country's economic reopening before getting growth of new cases down to a controllable level, according to leading health experts. At the conclusion of its 2-day monetary policy meeting on Wednesday, the US Federal Reserve released its first pandemic-era economic outlook, after which Chair Jerome Powell warned of a long road to recovery. The Fed, keeping rates steady since 2022, could give investors the impression that the Fed may be more concerned about the pace of economic recovery than originally anticipated, said Joseph Sorak, Chief Investment Officer at Nova Point in Atlanta. Economic data appeared to back up the Fed's gloomy economic predictions, with jobless claims still more than double the peak during the Great Recession, and continuing claims as an astonishingly high 20.9 million. So there you go, everyone. The market is, well, continuing. We'll see how it goes today, what the volatility is. Let's look at this at a 10-year picture, guys. We'll look at this volatility that we're seeing here at a 10-year picture just to see the impact that it's going to have. Look at it in a greater context. We'll try 20 years. Come on. You got to love the NBN. We can see here the Nasdaq. The Nasdaq here, and the Dow Jones. What do you think? Would you be keen to do a live stream tonight, guys? Maybe. It's pretty bloody late for the opening of it. Okay. We can have a look, and we'll jump to 25 years. Okay, so this is what happened during the GFC, everyone. There are lots of ups and downs. So here we go. Are we reaching the top of this dead cat bounce? We'll have to see. we'll have to see. Let me know your thoughts and opinions in the comments below. Please like, share, and subscribe to the channel. If you're a fan and want to support the content we create here, there are a few ways you can. You can join the channel on YouTube or Patreon. You can support us via our affiliate links at Amazon or eBay or Independent Reserve and KuCoin. You can buy a merch at Heiser Says. You can support us using Gold Pass from the Perth Mint or via PayPal. Take care, guys. Have a great weekend, and I'll see you in the next episode.